Welcome everybody. Welcome to another one of our videos. Again, I want to welcome you to our channel. Today our topic is going to be on rolling a rocket covered call over until another week. And then we're going to explain the order types. And we'll get into more of that detail once we get into the video. And then we're going to go and do a follow-up on our tracker afterwards. We always give some food for thought information throughout the video and at the end of the video. Okay, please click the like button and subscribe if you haven't done it already so you can get my future content. Okay, let's get started. All right, here we are. We're going to take an order of Rocket, the 2150 here that's expiring this week. And we're going to put an order in. There's only $27.50 left, and we already received about 86.7% of the premium. Okay, so far. This is a Thursday afternoon after the market's closed, so we only have until tomorrow to get the rest of this premium. So why would we want to roll this over to the next week? Well, right now the price of Rocket is down here at the 2067, okay? It's not going to hit the 2150 unless something happens tomorrow and it's going to go way up, okay? So what we're going to do is we're going to roll it over for another week. And if we do it on a Thursday versus Friday, we can get a little bit more premium because it's an extra day on the other option. I hope you understand that. You want to roll things over probably on a Thursday. Sometimes people do them on Wednesday, Thursday, or you can do them on Friday. Now, what we're going to do is we're going to be picking various prices in this of what money I want to get. Now, we're going to be able to keep this $179. And plus, I'm going to try to keep some of this because I'm going to put an order in until it's filled. And I'll show you when we go through this process. So we're going to go ahead and click this. All right, now we have to remember how many shares we had. So we just click trade. Now, because we're just rolling this over, we don't really have to do our research, but we can. So what we can do is we can go over here to Rocket. Okay, there she is after hours. She popped up 9 cents so far tonight. But I'm probably going to do another video on Rocket. We're going to talk more into it. There's a lot of information that's showing up in Rocket that people don't understand what's going on with it. Let's go over here to options. They will show you the option frame here. Okay. They'll show you there's only like 5 or 6 cents left of that option that expires tomorrow. It could go up to 2150 and we can get called away. That means it'll have to jump up quite a bit down here at 2077. Okay, so that means it has to go up 70, 80 cents from where it's at. We go up here. We change the date to February 19th because that's the next following week. Now we look at the premiums here. Now a lot of times I go look out here and I look at how many open interests are there out here. If there's a lot more open interest down here, that means they're setting up, they're preparing the stock to go down further. But not in all cases. So I can pick the 21. That'll give me 55 cents, between 52 and 57. I can pick the 2150. That can give me around 41 cents. Me, I like to pick the 2150. I want to be able to keep that $80 the next following week. And I want to keep as much of this as possible and then pick up some more premium here. Let's get back here. The decision-making process is finished. We're going for the 2150. Now we go over here, back to our options. Now here's our order form. Now we're going to perform a roll, so we're going to have to come up here to select a strategy. So we're going to roll. I'll just call it as a roll up there. Now this is the assets that we currently have, and we're going to buy to close. Remember, we're closing out this position for this first leg. This is leg 1. All right. Now the quantity we have is 5. Total of 5 options. Now, expiration date is this week. This was our strike price, and it's a call option. Now look at these premiums here that we're going to have to give back. We got to give that money back. Okay, just so you understand that. This is what we have to give back. Because remember, we picked up a premium on this position here. Let me get that thing down here a little bit further. All right, we're talking about this line item here. All right, we received a premium $207 for this option. Now we have to give back $6 per option plus commissions. So let's say $7. So $7 times 5 is $35. So we're going to lose $35. We got the sell to open. All right, this automatically puts in here. All you do is you pick your expiration date. The next week from February 12th is going to be February 19th. Now, strike price. Remember, we said $21.50, right? Now, what is $21.50 going to give us? Now, we're after hours, and it's showing us money. It'll give us between 37 cents and 43 cents. And this is all based off of this price, the closing price of tonight. So if this stuff goes over 21 something, you know, 21.30 or 21.40, I'm selling 1,000 shares tonight. Okay, because I picked up 500 more shares today of Rocket just to get the right price. Okay, once we put this in, it automatically gives us a net credit of 31 cents. Now that's money in our pocket. When it said net credit, this is money in our pocket. Let's say I wanted to change this order to an even. You know what they'll say? Yeah, why not? Okay, instead of giving you that cash, we'll just keep the cash, right? Ha! No deal here, buddy. We're going with net credit. It'll automatically put it in there. See? Net credit, 31 cents. It wants to give you 31 cents a share. That's a share price they're giving you. It's a differential between the 6 cents here and the 37 cents there. That's how they run. And then they automatically give you a price down there. It's automated. I don't like that. Okay? Because I want it closer to the 40 cents. I want more money. So down here you got the net bid and the ask. It says 31 cents to 38 cents. You know what I want? I want closer to 38 cents in my pocket. Let's go with this order once to see what happens here. Now, this is not the order. They're only allowing us to do a day. Normally it's good until canceled. That's interesting. Okay, let's hit preview. This is what the order would look like. You have the price up here. You have the list price. You have the bid and the ask. These are after hours, by the way. You have the last price of February 19th on the second leg. And they came up with a net credit of 31 cents. So net credit of 31 cents gives you $155. This is your estimated order amount, just like it says. Then you have to subtract all these commissions and the SEC fee. And this is the total that you're going to receive. Now, that's your premium. That's if you would have went with what they wanted to give you of 31 cents on the low ball side. Now, let's go back and edit this order. Because we don't want no 31 cents. What we want is we want to get paid. I think it's going to go for 41, maybe 42. Okay, and then subtract 6 from 42. You know, that's 36 at least. Shoot, if I can go to 37, I'll do it in a heartbeat. Yeah, 36 plus 6 equals 42. Not 41, 42. It says here, ask 43. I want 42. Now let's hit the preview. Remember that $155? Now, bam! You get $180 for your estimated order amount. They take out the commissions here, and now you're getting $173. You see, you just gave yourself a pay raise. Almost a $30 pay raise, just by putting your own price in and try to get that. Now, it's not saying that you're going to get that price, but the order is not going to go through unless they give you that price. Me, what I want to get is, I want more than that, because I think this thing is going to bounce up tomorrow. So if I'm going to go ahead and roll this puppy on over, I want to get paid. I'm going to go for 55 cents. Okay, I'm going to get paid if I'm going to wait another whole week and let you guys hang on to my money. Okay, I want to get paid. So this is what I would do. 55 to 75 cents. Okay, then this is getting paid. Pick your price. You put it up there. Okay, you make them come to you. Otherwise, you just stay in your position. And I'll just keep that 6 cents or whatever and do an option next week. You know, we don't know what the price is going to happen tomorrow. You know, the price might go up to $21. You know, let's see what after hours is going. Look, it's already at 20.82. It's going to be above this 20.67. It might open up at 21 bucks. And then this option will be worth more. I mean, you could have picked up more money if you would have waited one more day because the option went up. Okay, so that's a net credit here that we're talking about here. Let's go ahead and let's edit this thing. And then if we wanted to do even, let's find something that would put us in even. Let's say I have buy to close. Say we got the buy to close and we're at a 21 strike price. And let's say, for instance, we want to push it out to next week and we want a 24.50. Let's say we had a strike price today of 21. All right, and we wanted a buy to close instead of the 21.50 that we have. And there's still 12 cents or 13 cents left on the trade. Then the next following week, I think this thing's going to pop up to 24.50 range. So there's a difference between 21 and $24.50 a share. Let's go with 25. Let's make it more interesting. I think it's going to go up $4 from $21 to $4 more. I want that extra money. It's a 13 cents left on this trade. And this is per option. And it's going to be about 13 cents here on this trade. Even though it's saying it's net debt. That means they want us to pay 1 penny. Let's go ahead and preview it. And see what happens. A 1 penny net debt. Now, this is not a credit now. Now, this is not money that we put in our pockets. This is the money we have to pay. Okay? Now, let's hit preview order. That means now we have to pay $5 because it's 1 penny. And it's 5 options. So it's $5. We have to pay that plus the SEC commission plus the estimated commission. It's a total of $11.51 because it's a net debt for this order to go through. All right, now let's go back and do an even. Now this is all in a roll strategy. I'm just discussing roll strategy. Now let's say we want an order type even. So what do we want to do? What we can do is say even. That means we don't pay nothing other than the brokerage fee. Let's go ahead and preview the order. How much is the order going to cost us? Nothing. We're moving this option from 1 week, from February 12th to February 19th, and we raise the strike price from $21 to $25, and no money changed hands. So it means we broke even, and that's it. The estimated commission and the SEC, we still have to pay our estimated total, but we don't get no money. And we have to pay only for the actual trade. So that is the difference between the different order types of even, net credit, and net debit. Let's go ahead and look at my account overview. Okay, this is good that I got everything set up for tomorrow. All right, it's a little bit of figuring what I need to do. I need to get, if I'm going to sell these 1,000 shares, I picked up these 500 shares today. Right here, between 21.83 to 21.2, I'd rather be up here because it's 21.20 for these shares here, and these get called away tomorrow, which I don't think is happening. Then we'll have $287 of profits. Otherwise, if I get 20.83 and these get called away tomorrow, then we'll have 0 profits. It just gets called away. So we'll break even. But I don't see that happening either. But it could go up to 21.20, and I could roll these options over for another week. Now this rocket, I want it to go up to 21 and get called away, so then we'll get these two profits here. And we did pick up, oh yeah, we already picked up the $164. I closed out that position at BBBY. Hopefully we'll get this here. And if I see a trade tomorrow that I can make some money on, then yes, we'll get more money this week. Otherwise, we'll just get these two options here, which is $411, and I'm okay with $411 this week. I'm going to go after next week to try to close this positions out and these positions here. And trust me, we will get over 12 to 1,400 in some other trades. If everything works out well for us in our favor, because we're probably going to buy some more of these shares tomorrow. We're going to double down on these here. And I'm also looking at a couple of other companies. I appreciate you guys watching my video today. You know, when subscribers put stuff below and ask things if we can make a video on things, you know, we make videos on them. Okay? And that's what we've been doing over the last couple of videos. This person is called A. Cavali. I hope I pronounced that right. And that was underneath the exit strategy video. I wanted to know about the different order types. So today's video, I wanted to go through all that in depth. I hope you understand that I didn't confuse you guys up too much. So if you guys have any questions, put them down below in the comments. Or if you have any stocks or anything that you're looking at, or any option trades, or if you performed an option trade and it went in your favor, put that also down in the comments. And share our videos with others, and click the like button, and make sure you subscribe so you can get all the content, and you can also allow other people to get these videos in front of them. Alright, thank you all, and you guys take care. This is Sunny. You guys stay safe out there and stay warm. I know it's very cold out there. Alright, this is Sunny. I'm out.